Welcome to Buffetting, the podcast where my wife Cass and I share our conversations on investing with you as we try to keep compounding capital so I don't have to go back to being a carpenter.
And I don't have to go back working with real estate agents. We hope you find it informative and entertaining.
But we are not your financial advisors and nothing we say should be taken as investment advice. As always, do your own research, which is more fun.
And now, without further ado, on to the episode.
Ultimately, inflation bad for bonds. So, it's not the place to be. I'm not sure where the other place to go is, but I know this place is not good.
We don't instantly go from inflation, we've tipped it into a recession.
Yeah.
Now inflation magically disappears.
Yeah.
Because a recession is fixing inflation. That's not how it works.
Yeah.
But if we think about what we were saying last episode, the war hadn't even started yet.
I know. Do you think that we got the probability wrong on that one? Do you reckon that we misassessed that, or do you reckon it was just a really unusual, unlikely event that happened? That's the question that I can't really work out.
Well, I think we shallowly thought about it, and we quickly came to the conclusion that, look, even if it does happen, it's going to make inflation worse.
Yeah.
And the American people, yes, it's a shock, but eventually everybody gets back to caring about what affects them.
Yeah.
And the American people are going to be more affected by inflation than the war in Ukraine.
Exactly. Yeah. But it was certainly a very stressful and shocking 24 hours, wasn't it? Like when I got that news, the first time I saw it on Twitter, at like 2 o'clock in the afternoon, that they just started bombing the city. Like you said, you just don't think that's going to happen in this day and age, that someone's going to actually start doing something as crazy as that.
No.
But, turns out people are crazy enough to do stuff like that.
Yeah.
What's even crazier though is that it looks like he's miscalculated, eh? Like it looks like he can't even take the country, and
yeah, I know. Insane. Well, it feels like ages ago that the war actually kicked off. When did that happen? Was that a month ago?
Just over a month ago, yeah.
And that was crazy that when that happened, that was such an emotional week because, we're obviously holding our bond short. You don't want to be holding a flight to safety scenario where everyone thinks World War III is kicking off. We had to seriously consider potentially exiting the trade and being like, well, this has taken a turn that we are not qualified for. We don't know enough about geopolitics.
Exactly.
So we really just, we just hodled for the we hodled for the night on the fact that big perspective, we have to stay in the minds of what's going to affect Americans in the coming months more, and what if the Fed is going to
change course.
Yeah.
And I think the 30-year yield, which is kind of what I'm mostly watching, even though our the ETF that we're short, TLT, the average duration is about 20 years. So you think maybe you should be looking at the 20-year bond, but the 20-year bond is quite a weird bond. It hasn't been out for a long time, I don't think, and the trading is a bit unusual. The yield for the 20-year bond is actually higher than the 30-year bond, which is kind of strange. And when I looked at the past price correlations between bond prices and things like mortgage rates and the TLT price, the 30-year was seen to be what affected it the most. But I think the yield on that before the war started was 2.25%. And then when the war started, like you're saying before, there was a massive flight to safety and everyone piled in, and it forced the yield down from, I think, 2.25 to 2.14, I think. So
yes, I remember that night.
Yeah, that night. And that basically, pretty sure from memory, that erased most of the profits we had on the trade at that point.
Yeah.
And so then we're facing okay, well, is this war going to cause a depression and an instant recession because everyone's going to freak out? And so that would reduce demand. Or is it ultimately going to be inflationary? And I don't think I considered things like the sanctions would be inflationary, because that's mostly why the fuel prices have gone up, from what I can tell, is that they've discouraged the world from buying Russian oil. That's reduced in supply coming off the market, and that's forced the prices up instantly. But I think that most people haven't probably felt the actual inflation impacts of the grain, in that region not coming out as easily.
Well, you figure it probably won't be felt for weeks, if not months, if not, a year from now. Like,
who knows?
It's gonna be.
That's the start of the supply chain. Like that's the
beginning.
Before
how long does it take from harvest to production to supplies on shelves
exactly
to inflated prices because of the disruption that has occurred a month ago?
So your cornflakes are more expensive because the Ukrainian wheat supply didn't increase the.
They're more expensive, or you just get less of them.
You just get less.
Or the government subsidises it.
Or the government subsidises
in which case, it just locks in the higher prices.
Oh my goodness. It's crazy. But yeah, that was a crazy night. And we did consider selling the whole position because of uncertainty, because it was something that we considered. And I wasn't sure if we'd have time to really get our heads straight and consider what the ramifications were. But we basically, apart from being really upset that day, which we were, because it was very upsetting,
That's what I did in my tweet of everybody just have a 10-minute cry, get out your emotions before, don't just sit there and tweet.
No.
Everyone's tweeting emotional stuff giving advice to the military on what they should be doing. No, you don't know. We don't know. We're investors, man. Yeah,
it's not our area.
We're obviously emotional. We've obviously all been shocked. We obviously don't want to be thinking about money at a time when people are getting killed.
No.
It's a gross thing to have to do.
100%.
So what you have to do is separate that. You have to separate the emotion from the logic and the fact of what to make your decisions off. And
unless there's something that you can do, you're in your immediate life that you can help the situation, well then get emotional and motivated. But if you can't do anything about it, then
no, unless you are an expert, you've got an expertise or an expert opinion. But for investors, you've got to stay in the vacuum of your trade and what's going to affect your trade.
Yeah, exactly.
So we held on.
We hodled, and we're glad we did, because the yields kind of stayed quite stable through the first week, I think, of when Russia was bombing the heck out of poor old Ukraine. And
bonds were not moving that much. No one was pouring into it. No one knew where to move their money by the looks of it.
No. But the whole world feels like that at the moment, because if we get inflation, it's where does your money go? Obviously, logically, into commodities, but, I'm not sure what the capacity is of the commodity sector, both in the ETFs and they don't pay a return. So there's a lot of investors just will not invest in raw commodities because you don't actually get a percentage yield. So I guess you could move into miners and that, but that doesn't feel like as a good, substitute for bonds, which would, I guess, be a point against our bond short thesis. But ultimately, inflation bad for bonds. So, it's not the place to be. I'm not sure where the other place to go is, but I know this place is not good. So, we're glad we hodled, and the yields have recovered. Well, not recovered. The yields have crashed upwards. That's the confusing thing about bonds, people. They don't
honestly, we're sitting here, the way we're talking about it, it's kind of we're in negative territory on a trade or something. It's what has it done so far?
It's up about 200% on average. Yeah, at the moment.
But somehow, I don't feel comfortable yet in saying it's working, because we've had so many periods where it's gone the opposite way.
Exactly.
But it's kind of hit a threshold now of real abnormal. It's hit above 2.6.
Yeah, it peaked at 2. Which doesn't sound like a lot to people, because 2.25 to 2.64. What's the big deal? That's not very different in percentage terms, but that's a massive, massive, massive move historically for the bond market and
fixed income.
And exactly, fixed income. It's usually very stable, much more stable than that. And I saw somewhere, I think, that the size of the moves hasn't been seen like this in the bond market since 1994, which was the last time there was a bond crash. So, yeah.
And that kind of fits with what Bullard just recently said, which is what their tightening cycle. 94 is a good model to go off.
Yeah.
what to expect.
Yeah. I think multiple Fed people have said that now.
Yeah.
That 94 is a good model to go off, which, that's like people who are investing in housing saying, well, it's a good model, we're going to go off 2007. It's like, no, you don't want to you don't want to hear that, the chief of a housing company saying we're out in 2007 style
Not good.
area. Yeah, so it's a very sad situation, obviously, with the war and everything, but nothing we can do about it, unfortunately. So just trying to focus on the numbers in front of us, and it's going well so far, and definitely people, like, you see it on like CNBC and on Bloomberg and stuff, people are starting to develop arguments that, actually, there's a lot of reasons why inflation will, go on for longer, and it's probably because of deglobalization, and it's probably because of decarbonization, and like all of a sudden there's like arguments springing up to explain what's like already happened, which is quite funny to see, because I never really watched much of the sort of trendy financial news over the years, but because of this whole inflation thing, it's been so important to understand what the average investor is like thinking about on this topic. I think we've watched a lot more of it, and I've really seen how, like, I think Jim Bianco, who's like a person that we like quite a lot, he called it nowcasting. Like, people are like, that they tell the present as if it's like a recent prediction they've made, even though when you go back like 2 weeks, they were saying the opposite.
Yeah, they were kind of subtly hinting towards the opposite, and now they're kind of subtly hinting to the current market sentiment, and in a month's time they'll be saying whatever everyone else is saying.
Exactly.
Yeah,
the game is not to give accurate predictions. The game is to make sure your clients don't think that you're stupid, so they pull their money off you.
Yeah, so you currently sound like what everyone else is saying at the moment.
Exactly.
Which probably means that you'll never be right.
Yeah, that's not what Buffett talks about. Buffett talks about like analyzing a situation, understanding it really well, sticking in your circle of competence, sticking in your spot, and just swinging really hard when something feels in your sweet spot. Like, that's not how these people are. These people are like swinging at everything. Every ball that comes, they've got a specialist swing that's going to be perfect for that ball. But if,
Hey, that's what I wrote in my recent article. The macro man with a hammer, every chart looks like he's nailed it.
Oh, yeah. I'm going to plug you right now. You ready for this?
Yeah, go.
First ever Cass plug. If you think that our podcast is good, Cass writes these incredible macro economic, but they're fun. Like, they're hilarious. They're full of gifs. She's got articles full of gifs, and basically going through a lot of like the things that we're researching and going through and talking about them in more detail, because I always forget to talk about certain aspects, but when you write an article, you kind of go through it all very...
Oh, yeah, you got to link thought to thought. You can't have any go to the gaps.
No, definitely not. So, yeah, anyway. Yeah. But yeah, back to the macro thing. So that's like been pretty fascinating to see about the experts, and that's what your article's about too, isn't it?
Yeah, it is. Yeah, careful who you follow. Like, if people confuse you and you think, oh boy, they're smart, that's not a good sign if someone's confusing you.
Yeah.
Maybe they are smarter than you, but maybe they're not, and they're just trying to hide that fact, and they can get more follows, and then they can sell more research. Like, yeah.
It doesn't mean they're bad people or anything. It's just, when you're doing something as important as trying to compound capital so you can do something good in the world, like, it's a bit like listening to like the most beautiful sounding doctor, not like the doctor who's like got the best track record. Like Nassim Taleb's talked about that. He's like, you don't want the best looking surgeon. You want like the gruffest, most like, if he's got like a stain on his shirt, that's good, because he has succeeded as a surgeon despite looking and being like that. And that's kind of what you want. And
well, that wouldn't have gone well with the whole Dr. Death story.
No, that's true.
Didn't that guy just have like rips in all of his...
That's a huge flaw in that argument. That's imagine that. Oh god.
Nassim Taleb debunked.
Nassim Taleb debunked. Yeah.
No, but generally it's probably right. The guy's probably right.
Probably right.
Yeah. But that's funny because...
I was just saying, sorry, the reason why we had this opinion now is because with the whole inflation thing, we went through so many, because you're a lot more rigorous than me with your investment thinking. So I'm good with big ideas and I'm good with seeing things from the kind of larger point of view. But then you are incredibly rigorous at going through all of the implications of what we think is going to happen and researching all of those. So then we obviously went through every argument that we could find against our like very strong belief that inflation was not transitory and that inflation needed higher interest rates to solve it, and that would involve all bond yields rising, and the Fed would want them to rise because they have no choice. So we then, for everyone who was thinking the opposite, which was like everybody else, we then went through the best arguments we could find. And a lot of the best arguments were from, people who do like put out macro research and they sell subscriptions to their research, and they sound really convincing and they sound really intelligent. And after going through some of these things, we realized like this is really, really confusing. But actually, the core of what they're saying is not very confusing. It's actually quite simple. So why was it put in such a confusing way? And unfortunately, I think that when you're trying to convince people with millions of dollars to pay you for research, you have to sound really smart. Not necessarily your ideas are correct, but you have to sound really smart. And I think people really associate smart with complexity. And I don't think it's a good thing to associate. I think that if your idea is correct, you should be able to put it forward quite simply.
Well, or at least when you dig into it, dig into their complexity, the foundation of it makes sense.
Yeah.
On a logical, reasonable basis. And it just happens so many times when we looked into this stuff and it doesn't make logical sense because all those arguments didn't account for inflation or backdating to a period in history where there was inflation.
Yeah.
Which changes everything.
Exactly. Why would you use comparisons for times of history when there was no inflation? When we have inflation, why not you look at periods in history where there was inflation, and that way you can sort of understand roughly what's likely to happen. Yeah. Seem pretty reasonable.
It's kind of, you got to think about the reasons behind these actions that have occurred in the past.
Yeah.
So going back to a previous time in history where the Fed hiked rates, you have to look at why they were hiking rates, and the reason matters.
Yeah.
Because if they're gonna stop in their hiking process, well, why did they stop last time, and will they stop for the same reason this time?
Don't compare time periods that had no inflation with now, which has loads of inflation. It's pretty simple. It's like, but that doesn't seem to work, because if you do that, then you get only one answer, which is that rates have to go up. And if you're selling a whole bunch of expensive macro research to people, they're probably not going to pay you as much if you tell them what they don't want to hear. And I think that's why I got this idea. I was like, this is preposterous. Like, this makes no sense. But then it felt like the virus, because, who wants to be told that, hey, there's this virus coming and your travel company is going to zero and your positions are probably too big to be liquidated this quickly, so you can't even do anything about it, but here's some bad news.
Oh, and also, how I said 6 months ago that inflation was transitory and don't worry about it.
Exactly.
Yeah, they're in a tough spot.
Yeah, I think some people have come out and admitted that they were wrong, but the vast majority of people just kind of pretend they never said it. And, I think that that's pretty disingenuous. You have to own it when you stuff up, and we stuff up all the time, so I think we're pretty, and I think because we have because we're clear, I guess, about what our positions are and what our beliefs are, and we kind of stand behind what we're saying. Our money is behind what we're saying. So I feel comfortable talking as strongly as we do, because ultimately we believe it and our money is allocated in that way. But if you're having these really strong opinions, do you even have a position? How much of your net worth is in the position? You're telling people how to invest their money. Surely you should have some skin in the game.
Yeah.
It's a really serious thing that you're talking about. It's not and that's why I compare it to a doctor. in a way. Like, you don't want to listen to the doctor who's like the most beautiful at talking, because actually the Dr. Death guy, he was fantastic at communicating.
Yeah, exactly.
You know, there you go. Like,
you need two measures. That's
you
all I'm saying.
You need two measures.
Don't just go for the guy with the holes in his scrubs.
Don't just go with the guy.
He could just be a homeless dude off the street.
Yeah. If the guy with the holes in his scrubs is also a slick talker, then run a mile. That's what you should. Yeah. Anyway, but yeah, we spent a lot of time going through all these arguments, and we're like, damn it, you've wasted our time.
Pretty much.
So we're cheesed a little bit.
Yeah.
But still good to exercise the brain. I still learned a lot, obviously, you know, going through the arguments. It's good for you. But yeah, we could have just gone to the beach or something.
Yeah.
So we've covered the war, covered the trade, we've covered our negativity on macro experts, we've covered... How about human nature? You got any thoughts on human nature? And not the band.
Human nature. Just trying to not be a nihilist at the moment, pretty much.
So
I just think that there's been like a massive sentiment change in humanity since COVID. Like, I can't get past it. Everyone who serves you anywhere, who's in a job, is so unhappy.
Yeah.
They're so aware that they're unhappy.
Yeah. Because they used to, for a period there, they were at home getting paid to do nothing. And I think now they come back to work, money's run out for a lot of people, and everything's more expensive, and they're working. And I just can't help but notice now how crap a lot of the jobs people have to do are, and how they could be done, they could be unnecessary. Like, if things were a bit more structured and systematized, and like, you can't get that from some top-down plan. You have to get that from entrepreneurs, like creating solutions and explaining to people how it's like profitable to do something better. Like, that's how you get improvement in the economy. The government doesn't do it, you know.
No, we're all just people at the end of the day. I don't know if people appreciate the fact that there isn't a government, like there isn't corporations, there isn't countries, really.
Yeah.
Everything is just people piled together in groups, or people who are individuals.
Yeah.
But yeah, I think it's reading that Weinstein's book, Hunter-Gatherers, of the how to be a hunter-gatherer in the 21st century or something.
Yep.
Yeah, our world is just so foreign to what we're built for. And it's scary to think that, like, we've built something to such a scale that you can't just go back very easily and fix things. And I don't think we've scaled a system built for people's happiness. We've scaled a system for growth and efficiency, but done really poorly, not taking into account anything people need to keep them ultimately happy. What suits us as our biologies and our human nature and what we need.
Yeah. And it doesn't seem to be much understanding of this in society, that people don't seem to realize that the biology that they have, the way their brain chemicals work to certain stimuli, the kind of relationships they want to form, the way they feel towards other people, all of that biology, all those mechanics have all been specifically honed for a world that's not our world now. It's a totally different world.
Yeah.
And I'm not even talking about like living in tribes and like, you know, running in the jungle and spearing things. Like, I'm just talking about like even a few hundred years ago. I don't know if it's from the book or from Brett Weinstein or whatever, but the place that you grew up and the people that you were around, they're the same people who you kind of grew old with. In most cases, the town that you were raised in, most people spent most of their time in that town. And that stability and that kind of reliability of your surroundings and the safety.
Community. People,
yeah.
A small or decent sized group of people who actually cared about each other and knew each other's names. Yeah,
exactly. And even comparing oneself within a group of 100 people, you know, for most people, if you're comparing yourself in a group of 100 or a few hundred people, then you would have been especially good at one or two things in that group that the group valued you for. But now we compare ourselves to the whole world. And like you can get people who are perfectly attractive feeling depressed that they're not attractive enough and spending thousands and thousands of dollars.
Because the absolute best version is in front of all of us to compare to.
Yeah.
Like,
yeah. You can get massive amounts of men who would have been considered valuable and useful feeling like they're losers because they're not the best in the world. And you get like this obsessive tendency towards like perfecting things about people, you know? And people, not feeling like they're good enough, not feeling like they're smart enough, not feeling like they're enough, basically. And then, creating huge amounts of unhappiness, which is really sad. But it's all because the modern world is so much more disconnected than the world of even a couple hundred years ago that we're built for, So, big problems. But I think that there's a chance that, because we heard that saying somewhere, hard times create strong men create good times create weak men create hard times, something like that.
Exactly.
And that's not like a man-woman thing, it's just like when there's hard times, it tends to separate things between what's really important and what's not important. And I think that the feeling that maybe most people have had this feeling that when there is a crisis happening, when there is something in your life where like someone's sick or there's some issue that needs to be solved, the mind kind of focuses around it and kind of like it feels good in a way, like it feels like meaningful what you're doing, which is probably why some people are like constantly create drama in their life for no reason, because the feeling of crisis, I think, can be addictive for people. And that's because it is because we evolved in a world where there was constant suffering and crises and fight and struggle and all of these things, and our brains, evolved to be at home in that world. And that is not the world now. We live in like a cushy nerf world.
We're pampered.
Crazy. But maybe because we haven't really had an economic hard time. We haven't had one in Australia since the early 90s. That's 30 years ago. So, recession is a time when people actually have to work really hard. They have to hustle. They have to find solutions to problems and make do with less. And
we can't have any more waste. That's the problem. Too much is getting wasted.
And that's the thing about recessions is they clean out the waste. And that sounds like a kind of a horrible survival of the fittest thing, I guess, but it is what they do. Companies that shouldn't survive, they don't survive. And
like we're not saying bring on a recession just to clean up the economy.
No.
We're saying tackle inflation. Inflation is the problem. In doing that means raising rates. And that means, everything in the economy that is wasteful will be getting cleaned out in that process. But it's a process that needs to happen to tackle that big problem of inflation. So, that with everyone on the bandwagon of the Fed should not raise rates still.
The economy is too weak.
Because they're gonna hurt everybody more. Or they'll have to stop and backtrack. If they do that while inflation is still where it's at and not getting better, that will just be stagflation. We don't instantly go from inflation, we've tipped it into a recession. Now inflation magically disappears because a recession is fixing inflation. That's not how it works. Recession can happen while inflation is still skyrocketing, while growth is on a downward spiral, while unemployment is going up, inflation can still be going higher. It's getting rid of inflation and then tackling the other problems afterwards.
Exactly.
That's what's been proven from history that needs to happen.
Exactly. And the question is, does the Fed understand the mistakes that were made in the 70s? That's the real question. And are they going to repeat those mistakes, which were every time inflation, basically that they kept rates constantly below inflation. So if inflation was 5, rates were at 3.5. And that just remained year after year. There was a constant lag. And when there was a recession, so unemployment rose. Then they had to, ease off basically, help the economy, make it better.
They chose to.
They
thought they had to because, can't fight inflation anymore. We've got unemployment now. Let's swap over to that, fix that. That was through the Nixon era.
Yeah.
That was proven to be wrong. Reagan came in with Volcker. They pushed interest rates higher than inflation. They kept them there. And there was a big margin between the inflation and the interest rate. The interest rate was high above it for a long time.
And that really got rid of inflation over a period of years.
Yes. And unemployment cranked up.
Yep.
There was a lot of pain. There was a lot of unhappy people.
Yep.
But it was necessary. We can't forget that lesson from history.
Exactly. Yeah. So there is another period of history after the Second World War, which I've started looking into a little bit, and there are similarities between that period and the period we're in now too. They had low unemployment as well, and they had a lot of issues coming out of the war with supply. They had a lot of problems getting everything they needed. So there is some similarities there. The problem is that we're going into a situation with huge savings, huge capacity to lend, bank reserves, huge bubbles, so huge stores of wealth in both the housing and the stock market. So to say that, the kind of economy is on its knees is just flat out wrong. Everyone who wants a job has a job. So the situation looks much more similar to the 70s to me.
Yeah, so the period after the war, you're talking, the 50s, 60s?
From 45 to 50, there was bad inflation, but then went away by itself. Mm-hmm. Because they sort of
After a war that America fought in?
Yeah.
Very different.
Very different.
Culturally, society, people's mindsets. People don't want to go back to work. They've been paid to stay at home and they're pissed off that they have to go back to work. They're pissed off all their costs are going up. Mm-hmm. They've not just had their men go off and fight in a war. They've not had to band together as a group to solve the problems and help each other like they did back then in the 40s. 70s, there was more of a wealth gap. Mm-hmm. There was more rioting and I think the 70s group of people is much similar to today than the 40s.
Going into the inflation of the 70s, huge amounts of welfare spending, huge amounts of government support and government spending, not on war, but on promotional programs and to help people,
The New Deal.
The New Deal.
Yeah. What was the New Deal or New Society?
New Society, that's right.
Society.
Yeah, New Society. So huge spending programs, so...
To, again, give the people the feeling of, wow, our life is so great. Look at all the stuff we're just getting. It's a pampering effect. And they're getting it. And they're not having to work for it because the government's just taken out a loan and they've sprinkled money everywhere. And they're this is what people need. Let's just build it from the top down.
Yeah.
And that gives people a feeling of you get something that you didn't have to work for.
Yeah.
And we all know with these government programs, they don't actually understand what each group of people needs.
Yeah.
So there's a lot of waste there. And there was a lot of waste in the COVID, monetary policy as well.
Yeah. There was a lot of waste in...
Because it's not targeted to the right area.
Yeah.
If you're just opening up mass piles of lending for people and companies just as buffers, well... that money's just funneled into assets. Yeah. People have just speculated. They haven't taken that money and done anything productive with it.
That's too difficult. It's too difficult to take money and then have a plan and then hire people and stuff. It's much better just to funnel it into some asset that's going up in value. It's not good for society.
It's just been policy error after policy error. And they're finally starting to fix it. And people being like, don't fix it. You're going to cause a recession.
Yeah.
Well, you're just putting off a needed medicine.
Exactly. And another argument that I've seen a lot, which I think is flat out wrong, pretty confident about that. Heard Joseph Wang say a very similar thing, which gives me a lot of confidence in my own ideas, which is that the government is somehow going to go bankrupt, or the government's going to struggle, or not be able to meet its obligations in some way, short term, if rates go up. To start with, the actual government interest cost as a percent of GDP, which is, I think, the right way to think about it, because ultimately the government can raise taxes tomorrow and they can pull money in and no one will have anything to do about it. They're just like, that's happening now, like that. So that's their capacity to suck money out, not to mention their capacity to borrow. They could issue, let's say, 500 billion of TIPS probably, Treasury inflation protected securities, and they could use that money to pay interest on their current loans. And, everyone's still getting paid, everyone's saying things happening. So at some point that ends, but we're so far away from that being an issue that the main problem is inflation. And the thing about inflation is it actually increases the government income. Taxes go up. So it gives more capacity. I think that's the side of the argument that most people are just missing. It's like, yes, inflation raises interest rates, and higher interest rates on debt historically would have caused problems. Not when your revenues are going up at a faster rate than your interest expenses. People are not, and margins are expanding in companies. If companies can actually afford to pay the interest, no issue. So,
yeah, everyone's got room. Everyone's got lots of room.
Everyone's got capacity. Yeah. And you don't see prices falling and demand falling until we run out of capacity. So, yeah, I think there's a few arguments floating around, as there always has been, because you have to have some argument, say that rates aren't going high, otherwise you get a panic. Like if people actually realise that rates might have to go to like 3.5%, 4% on the base rate of not the 30-year bond rate, but the Fed funds rate. They're like, put you in the money.
People aren't ready to hear that.
No, people aren't ready to hear that, and I think
Bullard just cracked out the 3%, but I don't know if anyone's cotton on to that yet.
No, I think people don't realise how much a lot of the chatter and a lot of the talk is designed to not create a panic. So,
the minutes are getting released shortly.
Yeah,
we'll see exactly how they plan to tighten from May.
So what the schedule of potential bond selling, and
that'll give us a good idea on what we think our hedge will do as well. Because we don't know if there's going to be a moment where everyone moves all at once. That'll be the optimum time to sell out of the trade, or if we're just going to hold this till the end. Like, we really don't know at this point. It's just a day-to-day monitoring.
Exactly. But while inflation's accelerating, and they've gone, 25 basis points. Oh my God, 25 basis points. And now everyone's saying like, oh, we're doing 50s from now on if inflation's getting worse, and that's freaking everybody out. That's what pushed the bond yields higher.
Yeah.
Wait till they start hiking 50, or if they go 75, like there's potential for a panic there for sure.
Yeah.
For sure. So the hard part with us is we got a time limit on our option. We're almost at that strike price now for TLT. We took the option out. TLT was like 147, I think, and now it's like 128.
Yeah.
So, yeah, it's on the right track, but I still think that there's a way to go. And, we'll keep hodling, eh?
Keep hodling.
Keep hodling and keep cuddling.
Hodl and cuddle.
That's what we do.
Nice.
If you got this far, thank you so much for listening. We really hope you enjoyed the conversation.
Now, if you'd like to become my 22nd
or my 43rd
follower on Twitter, links are in the show notes below. Mitch, anything else?
Nothing to add.